Welcome. Today, we're diving into a topic transforming the hospitality industry, though not always how owners expect. Imagine investing thousands in a modern POS, back office, and cloud accounting suite, expecting numbers to glide effortlessly to your financial statements. That's the dream. But the reality for many is a door labeled failure, locked by tangled red cables of duplicated data and manual workarounds. Here is the uncomfortable truth. Technology is only as intelligent as the person who configures it. Adoption without expertise is like buying a Ferrari and never learning to drive stick. Let's unlock that door and map a path to the numbers that actually drive your profit. Here's the core question. With the cloud POS and accounting markets ballooning toward $35 billion combined, why hasn't the ROI dial budged for most operators? If the systems are integrated, why are your teams still spending 10 plus hours every week reconciling discrepancies? It's because the research problem isn't whether systems can connect. It's whether the connection is designed to match how your business actually works. Mapping mismatches, phantom variances, and broken COGS automation are the hidden bottlenecks. If you're pouring hours into weekend reconciliation marathons, you're already paying the price. Now let's see if we can pay for insight instead. Software vendors promise turnkey solutions, but your operation isn't generic. A standard integration treats every eatery the same, but your chart of accounts demands precision, splitting dine-in from delivery or draft versus bottled revenue. Without operational knowledge mapping the logic, data slithers into silos and alerts scream without priority. The configuration complexity multiplies across 5 areas: revenue recognition, tax handling, payment mapping, COGS automation, and labor allocation. This is the gap. The technology can integrate, but it can't think. It doesn't know that a third-party delivery order needs its commission netted before the revenue hits your books. So, how do expert controllers bridge this gap? They treat integration as financial architecture, not an IT checkbox. Step 1. We redesign your chart of accounts into a clean, hierarchical map for operations, investors, and tax code. Step 2. We build mapping logic with conditional rules, like beer sales branching by package or discounts posting to visible expense lines. Step 3. We braid automation triggers so daily batches auto-reconcile and inventory pars update your COGS. Finally, Step 4. We layer reporting that answers strategic questions, like which Tuesday lunch combo actually pays the rent once all costs are loaded. This moves tech from an expense to a strategic asset. When the setup is done correctly, the results are dramatic. In one representative case, a regional restaurant group eliminated 10 hours of soul-sucking reconciliation every week, saving $18,000 annually. Month-end closed 3 days faster, giving leadership room to act. Quantifying it all, $35,000 in time savings, $64,000 in margin and labor optimization, and $15,000 in risk mitigation. Total value, over $113,000 in annual ROI. Compare that to a fractional controller fee that averages 20 cents on the dollar, proof that configured intelligence beats purchased cloud alone. The payoff travels well beyond the spreadsheets. Once your POS, back office, and accounting layers are integrated logically, you move from reactive record keeping to proactive decision intelligence. You can finally answer which items look profitable but lose money once prep labor is included. What is the optimal staffing for lunch based on real-time volume? How much cash will you need in 3 weeks based on your AP aging? This is the real-world implication of expert integration. You're no longer making million-dollar decisions based on gut feel. When your competitors are blindfolded by month-old data, you're operating with real-time strategic clarity. The final piece of the puzzle is moving to a controlled system of exception management. A real-time dashboard is worthless if you're drowning in noise. We configure intelligent alerts, COGS deviating more than 2 points, labor exceeding budget, or vendor price spikes detected automatically via invoice scanning. A finance leader calibrates these triggers to the sweet spot, not too sensitive to cause fatigue, but tight enough to catch crises before they hit your cash flow. Once these standards are defined, scaling to multi-location becomes a templated process. You aren't just having integrations, you are running a high-performance financial engine. We're back where we started, but now the door is open. You've seen the math. Unconfigured integrations swallow thousands, but expert mapping unlocks compounding value. You have three choices: wrestle the octopus alone, hire a permanent controller at six figures, or plug into fractional expertise to capture the benefits today. Look for the signs. If you aren't closing in 5 days, or if your managers don't trust the dashboards, it's time to treat your tech as a design project. Set your data free to multiply your ROI instead of your workload. Connect with Forks for the experienced accounting professionals your restaurant needs. Details in description below.